Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, we're going to be talking about best trading setups. We're going to break this down into smaller modules and break it down into each individual concepts, paint big picture down to little picture in terms of the big picture, thesis, and template, then down into the session trade opportunities themselves, how to hunt out the best instruments, and then executing a best trade setup, whether that be a scalp or a 5-star opportunity for asymmetrical risk reward. So firstly, we're going to be talking about weekly templates. There are two types of templates that we look for Monday to Friday, and that's the pump and dump template or the dump and pump template. So essentially the basic model in the weekly template is that we're looking for pump and dump or dump and pump type of template. We're going to go back, we'll review the last week or two of the major pairs, oil, gold, and the indexes. And we're just looking as to whether or not the template, we'll use a 1-hour chart, is by Monday to Friday a pump and a dump or a dump and a pump type template. And that will ideally, when we start to identify the type of template that we may be in, allow us to make a hypothesis or a thesis on a potential best trade candidate in the session that we're trading as to whether or not we have a trend trade opportunity or a reversal trade. So even within the session itself, we will either have a dump and a pump for a trend trade or a pump and a dump and a trend trade. Or we'll have a broken down market that reverses on a dump and a pump or a pump and a dump. As I repeat over and over again, there are only two types of trade setups, and I'm looking for trades in each session. I trade mainly the New York session, and occasionally I'm looking for a frontside backside opportunity in the Asian window on one of the Asian crosses. But 90% of my trades are in the New York session, primarily oil, gold, or the indexes. But the currencies offer us fantastic trade setups for traders that feel more comfortable with those markets or with those pairs. They don't move quite as volatile. There are several easy free cash opportunities on those pairs. So when we go over this, the most important thing to understand is the pump and the dump or the dump and a pump weekly template. Now, a basic dump and pump model is a market that gives us our opening range and initial balance, and we have a dump and pump type of template, whether that's day 1, day 2, inside day 3, and the parabolic reversal on a Friday. That's a basic dump and pump template. You'll notice we come down, we pump. Wednesday's the midpoint range of the week. We reset. That becomes our new, essentially, opening range as we head into the closing range of the week. We can have an inside day, day 1, day 2, inside day, and a reset, and then a day 1, day 2. Like Paul Tudor Jones says, if a market's giving you an indication of a possible directional movement for a range expansion, do not fight the tape. This is a dump and pump type of template. Now, the opposite of that is we actually could have a market that starts on a Monday and goes lower on a Tuesday and begins a pump and dump template for a parabolic move down on a Friday. There are different types of variations, but again, the same principles apply. Pump and dump. We can get a day 1, the escalator, day 2, day 3, and the parabolic reversal. Within this, we might have a dump and pump into a US session, 3-session setup for a vertical collapse back down to the low of the week. A pump and dump template. Now, the other side of that is we can get a market that breaks out on a Monday and pumps up on day 2. Day 3, we can get a break in structure that pumps back up for a dump on a Friday. Similar, just a different variation, a pump and dump template. The simple model is this, though. Day 1, day 2, day 3, we can have inside day, whatever, but it's pump and dump, or it's dump and pump. Same thing, just in the opposite direction. And within this dump and pump or pump and dump templates, some of these moves may not be the best trade candidates. Whereas we get to Friday and we may find an instrument that is a best trade candidate for one trade out of this whole week, as these other movements might not have been tradable. There might have been major red news. It might have been choppy, back and forth, even though there's been 3 levels of drop, which we'll get into later in one of the following videos. But we may get a parabolic explosive 3-session setup, whether that's in London on Friday or on the day 3. It could happen on a Thursday. But this may be the best candidate that goes low of session, high of week on the dump and pump template on a free cash Friday. Most important thing to understand is that we can get a dump and a pump template or a pump and a dump template on a Monday, Wednesday, Friday template. Now we'll talk about this in more depth because this is important. Monday to Friday, I'll just clean that up a bit. Monday to Friday template. This is what's causing a lot of confusion for traders. And that is that Monday is day 1, our opening range of the week. We will often see a new timing cycle, a new week starts, and traders are still following technical analysis and other indicators, but Monday will oftentimes be a day that flips the book. It's a narrow range day. They may split high-low. Breakout traders may be in the market, but it starts a new weekly template. Day 2, by the time Tuesday has printed in a large percentage of the time, one of those extremes will tend to hold. Wednesday forms the midpoint range of the week, and that is our day 3. We'll often look for free cash Wednesdays, parabolic opportunity on a day 3, and that is our midpoint range of the week. That resets at the close of the day as our new day 1 heading into our Wednesday, Thursday, Friday. Wednesday becomes day 1, Thursday becomes day 2, and Friday is our day 3, the closing range of the week. That closes the week out. Monday opens the week, Friday closes the week, which is why you'll often hear me use the phrase free cash Friday. As we just saw on those templates, we may get a parabolic move on a Friday that reverses an entire weekly move on a basic dump and pump or pump and dump template. This is the basic model. Monday, Tuesday, Wednesday. Wednesday resets, even if it's a trend continuation for a measured move. It is a reset for a new day 1, day 2, day 3, heading into Wednesday, Thursday, and Friday, closing range of the week. Now, the next opportunity that we talk about in the playbook are 3-day setups. 3-day setups. That begins with a failed breakout at the high or low of a week, whether that's a Friday, whether that's a Monday, whether that's a Thursday. That is what will give us a 3-day setup opportunity. That is separate from, we can get a day 3 in a 3-day setup on a Tuesday. So if you can separate those two right away, Monday to Friday has a template, but we can still get setups each day based on different market behaviors on different instruments. We can get a 3-day setup for a Friday, Monday, Tuesday parabolic opportunity in a session, whether that's Asia, London, or New York, depending on the instrument. We can get a Thursday, Friday, Monday, high of the week, high of the month, low of the week, low of the month, or a reversal, parabolic reversal opportunity on a Monday from a Thursday, Friday, Monday. There are different types of situations as I've just sort of panned out. For example, Monday, Tuesday, Wednesday, a Friday, Monday, Tuesday, a Tuesday, Wednesday, Thursday, or a Thursday, Friday, Monday, just to throw some different variations out there. But I'm looking in this particular instance for the day 3 parabolic trading setup. So if you can count 3 days from a high or a low, we may have an opportunity, or I may have an opportunity in the session that I'm trading on the instrument that I'm hunting that out on, or if I'm looking at a specific instrument, there may be a day 3 parabolic opportunity. Now, important to understand with this, with a failed breakout high or low of the week, is this. It becomes a failed breakout when a daily level is broken the next or the following day. So if it's an inside day, obviously a daily level hasn't been broken. But as soon as a daily level is broken, in line with that failed breakout, that confirms that that is a failed breakout. Because otherwise it can be a breakout pullback continuation, which is where a lot of traders are getting caught out because they're calling every breakout pullback a failed breakout. And that is not true. We'll look at some examples of that. A breakout fails once the other daily level is broken the following day. If it's an inside day, it would be the day after that breaks that level, confirming that the day one is now indeed day one and is a failed breakout. Now, the other opportunity that I talk about in the playbook and that I look for is 3 days of breakout traders in the market. Now, important to recognize with this is that this is a signal day. It is not necessarily the day itself. So day one starts when we have our first day of breakout traders in the market. That can be on a Monday, can be on a Tuesday. We can get 3 days not breaking out of the following days, but they are staying outside in line with that first breakout, and we have volume now trading higher or lower away from that breakout. Sometimes we'll see traders looking on that day 3 and they're trying to trade a market that hasn't given them a setup when it's the following day, and that may coincide with a Fed week, a non-farm payrolls week, which we have this week. But 3 days of breakout traders in the market, up high or down low, is a signal day for a potential large parabolic opportunity. Now, just to clarify, we're looking for something that breaks out and holds up high for a possible collapse. We are not looking for something that continues to trend higher and higher until we see a break in structure and then an ideal opportunity. That is different. A trending market still on the front side, if it's still on the front side of a move, that is not an ideal opportunity. What we are looking for is a market that goes vertical and breaks out. Could be on major red news. We can see it holding up high, trapping volume up high, and then possibly breaking down for a pump and dump or a dump and pump type of template. So those are the 3 main opportunities. Go back, rewind this, look at that again. We have Monday to Friday templates. Day 1, day 2, day 3. Wednesday is a reset going into the closing range of the week. Day 1, day 2, day 3. Friday becomes our new day 3, the closing range of the week. Again, 3-day setup. Start with a failed breakout at a high or low of a week. Day 1, day 2, day 3. We talk about inside days in the playbook. We talk about the inside day trading opportunity for trend trades or reversals. And you'll often see that on a day 2 or a day 3 in a Monday to Friday template or in a 3-day setup. And of course, again, just as we talked about, 3 days of breakout traders in the markets. Day 1 starting with the first day in a new week. I tend to look for this in a new week because traders will say we got 6 days of breakout traders. Monday starts the new week, and I will start the count again on a Monday in a new Monday to Friday template. 3 days of breakout traders in the markets. So if we take a look at the Japanese yen, again, just looking at the templates, if we start on a Monday, we're in the middle of a week. We could go back to the beginning of the month, but we'll just keep it simple. We'll look at the last 2 weeks. I just want to paint the picture of Monday, Tuesday, Wednesday. Opening range, initial balance. So as I said, in a large percentage of cases, by the time Monday, Tuesday prints, one of those extremes will tend to hold. This helps us form a thesis each day when we're looking at instruments for a best trade candidate. Not to say that this pair was the best on any given day. I'm just looking at any pair and we're looking at the templates. So we have our Monday, Tuesday forms our opening range initial balance. Wednesday becomes our reset heading into the closing range of the week. And that becomes our day 1, day 2 on our Thursday into our Free Cash Friday. And again, a similar type of scenario, pump and dump. Day 1, day 2, day 3, a reset, day 1, day 2, day 3, parabolic move on a Wednesday. We're not even going to worry about the calendar. I just want to paint the big picture of templates and then allowing traders to be looking for candidates amongst the basket of instruments that they're trading. So important to understand the two types of templates, and then there's also the importance of recognizing when something is not in any type of template, or it's trending, or it's messy. We're looking for basic models, and again, if we just looked at this Monday, Tuesday initial balance, peak formation low on a Monday, that low held for the entire week. That can help us form a thesis, whether that's in London on Thursday, whether that's on Friday coming into the U.S. session for a session scalp from highest session to low a day. Again, some of this will depend on the calendar on the day itself in the session that you're trading, if there's any major red news. And then we come back and we look at the next week. We have Monday, Tuesday, and again, our opening range and initial balance. And by the time we get to Friday, one of those extremes may hold, or both of them may. We have a parabolic breakout on Wednesday, day 3, which resets at the close and becomes our day 1, heading back into the closing range of the week. Day 1, day 2, day 3. Parabolic move in the U.S. session. We have a grinding reversal trade on our Thursday, but it event starts as a pump day, but ends up being a dump and pump template over the course of the week. So remember, as I said, depending on the session that you're trading, even though there's been movement, we're not even looking at numbers or levels, we're just talking about templates. This may not have necessarily been tradable in the session that you're trading, or there may have been a first bar on major red news. There may be an Asian opportunity on the backside. As I said, front side, backside. So we have our move down, we have our move up. So there may have been an opportunity in the Asian session on Thursday, that was a trade that I did take last week. On the reversal, we traded back into the low of the week, and that formed our reversal, starting the daily grind up on Thursday, day 2, and the market went vertical on major red news in the U.S. session, back to the high of the week, low of the week, high of the week. Now, this is a great example of a market that continues. So going back to the process, we have our opening range and initial balance Monday, Tuesday. This is the Euro 1 hour chart. Again, I'm using 1 hour charts just to demonstrate the templates. So we have a market that goes lower on day 2, our initial balance, and that forms our initial opening range and initial balance for the week. As I talked about in high percentage of cases, one of those extremes will tend to hold. We go lower on Wednesday, day 3, which starts our reset for day 1, day 2, day 3 into the closing range of the week. So we have our Wednesday, Thursday goes lower, and our closing range on major red news is volatile before pulling back into the low of our Wednesday reset. The point of this template is to demonstrate that it doesn't always have to be a reversal. It can be a continuation type of market. Day 1, day 2, day 3, reset. Day 1, that's our opening range into the reset of the closing range, Wednesday, Thursday, Friday, day 1, day 2, day 3. Now, again, just reinforcing that we may not have had a best trade candidate, even though we've identified the template in the session that you may have been trading. You might have been trading Asia or the US, and the opportunities may have been potentially on the US on Wednesday or in London on Tuesday, and that may have been the only ones. Perhaps maybe a scalp on Friday after major red news for 25 to 50 pips, but there may have only been a couple high probability best trade candidates. But it's important, no matter which instrument you're trading, that you understand the templates, day 1, day 2, day 3. Now, we haven't talked about breakout traders, but we will while we're here. So we have a market that formed a failed breakout at the high of the week once this level was broken. So in this particular instance, the daily level on the opposite side was broken within the same day, and that starts a day count for a day 1. Wednesday becomes a day 2. Now this is for a 3-day setup for a low-hanging fruit trend trade continuation, again Asia, London, or New York on Thursday, which becomes our day 3 in a 3-day setup. A 3-day setup. Now also, we'll talk about this while we're here. So we have day 1 breakout traders in the market on our Tuesday, first day of shorts in the market. We have day 2 shorts in the market on our Wednesday. So that's the second day of breakout traders in the market. Whether this market broke out and pulled back, it still closed outside of the range in line with our original breakout. And we have 3 days of breakout traders in the market on our Friday, which if we bring this across, you'll notice coming into this week, opening range, narrow range day, inside day, they false break. So going back to the playbook. So again, 3-day setups. We talk about the opening range and initial balance, the basic model for trade entries, which we'll talk about further, but Monday's opening range and initial balance, and then also 3 days of longs or shorts in the markets. Most importantly, though, is that we start a new week and we're considering that information, but we're looking for signal days, inside days for trend trades or reversal trades. So we had 3 days of breakout traders in the market. Our closing range of the week now forms a failed breakout into our new week, narrow range day. They trigger the inside day on day 2, Tuesday. They go down to the low of the day. They hit stops. So false break on the upside. This is on the inside. This is the weekly high of a new week, but we have a reversal in our U.S. session. 3 days of breakout traders in the markets. And just to clarify again to traders who ask, what do you mean by an inside day? An inside day is a day that does not break a previous day's high or low or break out. It's a narrow range day, which we'll often see on a Monday. So sometimes we'll see a narrow range day. It's inside of other days, which we can have a 3-day setup on. But a narrow range day that is an inside day on a Monday will often give us an opportunity for a reversal opportunity. So we had higher highs on the inside, which we're going to get into again in the following video. We'll talk about the dump and pump, pump and dump. So we have weekly templates that are dump and pumps, and we have session templates within the day itself that form dump and pumps and pump and dumps. So we start a new week. We'll bring this across Monday, Wednesday, Friday. We'll bring this up here since we're on Free Cash Wednesday. That's the high of our Wednesday. They could go higher. Remember what I said earlier this week is that we can often see a 4-day setup on a non-farm payrolls week, but you'll notice Tuesday in this particular case was a failed breakout of Monday's low. And that can start our day count now for a day 1. Day 2, we can see anything tomorrow. We can see an inside day. We can see a false break. We can see anything, but we have on our Free Cash Friday this week, we have a non-farm payrolls. Now, I don't know if this is going to be a continuation trade. We could see a reversal trade. I have no idea, but we have day 1 starting down in our weekly template. We have low of the week on a Monday, an inside bar, peak formation low on Tuesday. It's a non-farm payrolls week, so I will postulate that we could see a Friday opportunity, whether it's a trend trade or a reversal trade, on non-farm payrolls, whether that's in the New York open session after the news is released or if it's a continuation trade. But we tend to look for 2 opportunities on Free Cash Friday, parabolic reversals and parabolic trend trades. But we can see in this particular template, it was a day 1, day 2, day 3, a reset and a continuation that reversed on our new weekly template for the dump and pump reversal. And where did we go back to? All the way back to the high of the previous week. Dump and pump, pump and dump. Day 1, day 2, day 3. Now just looking at the NASDAQ, I'm going to just go through this and then I'm going to encourage you to all go back through your charts and just be, once you're in the process, it's not hard to just be picking up a chart each week and going Monday, Tuesday, Wednesday, Friday, Monday, Tuesday, whatever those are. Identifying a failed breakout, but looking for the big picture. So a lot of traders, again, I mentioned they're looking for first green day on a Monday and first red day, and sometimes that is the thesis, but often they'll miss the trade the following day. They'll look for it on a Monday, but we're looking for the pump and the dump or the dump and the pump. And when you see the bigger picture, that's when the first green day, first red day trades will be easily identified because you'll either be up high and see when we get a big move down like last Thursday, we don't want to be looking and calling this a first red day. We've already had a big, probably 300 plus, 400 plus pip drop. We're looking for something up high, similar to here on Tuesday. I'll just highlight this. We had a Monday pump day, Tuesday first green day, but we haven't broken any levels. That's an ideal first red day candidate. Next day, we come into our U.S. session. It's already down low. We're going to talk coming up in the following video about closing price of the day. As Paul Tudor Jones says, pay particular attention to a closing price level. But today's video, just in this part one, we're talking about the pump and the dump templates and going back to your playbook and understanding the power of understanding opening range and initial balance. So again, opening range, Monday high low, that sets the initial high low for the week. We can talk about the closing price of a week as well, but today, again, specifically, we're focusing just on the big picture templates. Pump, day one. By the time day two closes, we have, in a high percentage of cases, the high and low of the week. And one of those extremes will tend to hold, which can give you weight behind taking a best trade candidate, whether it's low-hanging fruit, whether it's a trend trade, reversal trade, whatever that may be in the session that you're trading. But also, if there's major red news, as we potentially had on this day, a Fed day, market breaks down, now we can still go back to our other understanding of market behavior. Failed breakout at the high of the week starts our day count. If that's day one, then Wednesday potentially is day two. We have a market still in breakout. We have a market that is still in breakout that goes lower first and pumps up. Go back to the playbook. Measure up from the low of the day. Measure up from the low of the day. Specifically, we're looking for 3 levels, but more importantly, breakout pullback, as markets only do 3 things. They break out, pull back, and continue in a trend trade. They break out, reverse, and failed breakout, or they will stay in a trading range, in a range-bound market between a high and a low, and not go anywhere, which we will see in some weekly templates. But if we have this opportunity, this market moves late on a free cash Friday, we're down low in breakout. Again, at the New York Open, timings, levels, behavior of price, the low of the day is right down at the New York Open. This is a 1-hour chart. This may have been an opportunity for a session scalp back to the breakout level of where this market collapsed. Day 1, failed breakout. Day 2, day 3 for a reversal trade, but we now also have day 1 breakout traders in the market. Day 2 breakout traders in the market. And on Free Cash Friday, 3 days of breakout traders in the market, and we're down low at the New York Open for a session trade, a reversal trade back to the breakout level on Free Cash Friday, whether traders found a better opportunity somewhere else. So reinforcing the 3 types of opportunities. We can follow that process through in the next week. Monday's the opening range. We have a market that reset on Wednesday, right? Day 1, day 2, day 3. Wednesday becomes our reset. Day 1, day 2, day 3. The closing range of the week comes back inside of our breakout on our Monday, and we have a split box, which I've talked about again in previous videos. That's a market that makes a peak formation and a peak formation on day 1, and we've split on the breakout. We have day 1 longs in the market. Day 1 longs in the market, which starts our new thesis now, once we break the high of Friday, as Friday becomes our day 1 in a possible 3-day setup. We have a new week, a new template, Monday to Friday template, day 1, day 2, day 3, but we also have a failed breakout at the low of the week. So we may get a trade on Tuesday in the U.S. session at the high of the day, the high of the current week, for a reversal opportunity. It breaks out up top, and gives traders a reversal opportunity back into the low of the day. High of the week, low of the day on a day 3 reversal trade. So going back into our process on this, we have day 1 longs in the market on Monday. That's a breakout of Friday's high. So we have day 1 longs in the market. I'll bring this box over. We have day 2 longs in the market. So 2 days of breakout traders in the market. So coming back and just looking at Friday, we have Friday's breakout. So whether this broke out on Tuesday or not is not necessarily important. They are still outside of Friday's high-low, which means this breakout is still intact. And on Wednesday, they go parabolic and break out again and give us 3 days of breakout traders in the market. Now, we're going to talk more specifically about daily templates, a high and low inside of a previous day's range prior to a session beginning. Obviously, major red news on this particular day, but this is critical. I work from the high and the low of the day. If these levels haven't been broken, I work from these extremes when the New York session begins. 3 days of breakout traders in the market at the high of the week. We've taken out the previous week's high, and we're heading into the U.S. session with 3 days of breakout traders in the market at the high of the week, right at the beginning of the U.S. New York window, for a huge parabolic collapse on Thursday, which is day 3 breakout traders in the market. Failed breakout on Friday, 3-day setup, a reversal, parabolic move on Wednesday, our reset. That's our day 1 heading into the closing range of the week. A failed breakout on Thursday, day 1, day 2, parabolic collapse, and some session opportunities in the NASDAQ from high of day, low of day, heading into the close. Day 1, day 2, day 3, closing range of the week. Heading into our Monday again, we have a market that breaks out of Friday's high. We have day 1 longs in the market. In a new week, a new timing cycle. Who's in the market? Longs are. Day 1 longs in the market. As Paul Tudor Jones says, if a market's trying to go in a direction of a range expansion, learn to study that and don't fight the tape. Failed breakout on Friday. Once Friday's high is broken, that starts our day count for a potential day 1, day 2 parabolic move on Tuesday again in a 3-day setup. Monday's the opening range. Tuesday now is our initial balance. We've taken out Tuesday's high. We have Monday, Tuesday, Wednesday. This is a non-farm payrolls week. You've pump and dump, dump and pump. They're going to be trend trades within those templates and reversal trades within those templates. We're going to have a Monday to Friday template. Day 1 is opening range. Day 2, initial balance. Day 3, we're looking for a parabolic opportunity. That resets as the new day 1 heading into the closing range of the week. Thursday is day 2. Friday is our day 3. Monday to Friday template. We can have 3-day setups that start with a failed breakout at the high or low of a week. That becomes our day 1. And that will often coincide near the end of a week if we're heading into a new week. Or it can be, for example, a Monday, Tuesday failed breakout, which starts a new day count, day 1, day 2, day 3. Parabolic move possibly on a Thursday. We can see 3-day setups all over the place. So again, important to be hunting out a basket of instruments and just looking for the easy free cash trading setups, not trying to trade one instrument every single day. We're looking for the best candidate on the day itself for an easy parabolic session trade. And then we have 3 days of breakout traders in the markets. And as we've seen, this can coincide with a 3-day setup. It can coincide with a Monday to Friday template. But we're looking for that day 3 breakout as a signal day. Day 3 longs in the market. The market may not have the trade that day. It may be the following day. Or as we see in possibly a non-farm payrolls week, we can see that big move occur on a major red news release, etc. First bounce, first bar. But most of those opportunities will still coincide with the New York Open, barring that there's no major red news after the Open. If there is major red news that comes after 9:30, when that news is released, that becomes the open of the day of that session for me. So hopefully this helps. Study the templates, understand the 3 types of opportunities, very simple, and look for the best candidate in the session that you're trading. Keep it simple. 1% better every single day, traders, and may the markets go with you. In the next video, we'll be talking about closing price, 3 session setups for parabolic opportunities, but the importance of understanding the best template on the day for easy free cash trading setups. Have a great day, and may the markets go with you.